Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now to the show at hand.
Hello there, Yoni Schmidt here, hosting today's episode of the Same Day Podcast, where I connect with top business and real estate leaders. Past guests include Brandon Neff, an entrepreneur and real estate investor, self-managing landlord in Tulsa, Oklahoma; Jared Goldfarb, Vice President of First Bank; Noah Bleicher, Director of Operations at Capital Homes. Today's episode is brought to you by Keyrenter Property Management. At Keyrenter Property Management, we are a full-service property management company helping our clients buy, renovate, and operate real estate assets. We help our clients build wealth while taking the headache out of property management. That's why no matter what rental you have, single-family home, condos, townhomes, apartments, we have the management solutions for you. Go to KeyrenterPMC.com or email us at KeyrenterPMC.com. Welcome to today's episode, where we have the privilege of speaking with Chris Prefontaine, a towering figure in the real estate investment landscape. Chris, the chairman and founder of Smart Real Estate Coach, has dedicated over 3 decades to mastering and reshaping the real estate world. His innovative approach to acquisitions and creative real estate deals empowers real estate investors and has significantly altered the way many view and engage with the market. As a 4 times best-selling author of Real Estate on Your Terms, Forbes Business Council member, and 3 times Inc. 5000 honoree, Chris has not only achieved personal success, but has also committed himself to guiding others to financial freedom and success in real estate investing. His passion for education has led him to coach many around North America, sharing strategies that debunk traditional real estate myths and offer more accessible path to wealth building. Beyond his professional accolades, Chris's dedication to philanthropy and his involvement with organizations like the Wounded Warrior Project speaks volumes about his character and commitment to making a positive impact in the world. Today, Chris joins us to share his journey, insights, and strategies for success in real estate investing, offering inspiration and practical advice for anyone looking to make their mark in the industry. Join us as we delve into the conversation with Chris Prefontaine, a true innovator and a mentor in the field of real estate. Welcome to the show, and thank you for being here, Chris.
You bet, Yoni. I'm great, and thanks for having me. I look forward to diving in, and hopefully we can share some nuggets with the listeners.
Yeah, beautiful. Thank you. Let's just dive right in. Chris, with over 30 years in real estate, can you share a little bit about your career, your journey? How did you start? Where did that passion come from, and what first drew you to real estate?
Yeah, so I won't put your listeners to sleep with 30 years, but I will tell you that I journeyed from building homes in the 90s to owning a brokerage, meaning I had my realtor hat on at that time, never did that. Sold that business to Coldwell Banker in 2000, and then from 2000 till the crash of '08, I was operating with my own properties and coaching people throughout the United States and Canada. What that led to, though, Yoni, it brought us right up to the 2008 crash. And in the 2008 crash was pivotal, why I kind of fast forward to there, because in that crash, I came out of that beat up financially, beat up mentally. But I said, okay, what do we have to do to re-engineer the business so we can still operate and never do that again, never be in trouble again? And that there were a few things that came out of that, 2 in particular. And of course, we're going to give everybody the free book later, and I get into more detail because it was a bit of a horror story. But 2 things came out of it. One, let's not ever sign personally. In other words, pledge our personal guarantee for a loan. So never borrow money. And 2, don't pledge credit. Now, my credit went from phenomenal to in the toilet. So we didn't have a choice. I didn't have a credit to pledge, but it was a lesson to never do that again. And then 3rd, let's not do a real estate transaction, which everybody's used to, and get paid once. Like build a house, get paid, sell a house, get paid, flip a house, get paid once. Because every January you got to redo that, right? So we trademarked federally the 3 payday system, which allows you to get money now when you do a deal like everybody's used to, money continuously, cash flow, and then long-term wealth building in cash. So we've kind of, that model to me is a good business model for any business, let alone a real estate deal. But it allows the investor to get off the treadmill, so to speak, and get paid 3 times on a deal. So fast forward to today. Family company, myself, my son, Nick, my son-in-law, Zach, and a great team surrounding us now. Thankful post-COVID, we can be everywhere in the country, right? We don't have to be together anymore. So our team is spread out. We do our deals still in the New England area, but we also have, as you alluded to, hit the fastest growing companies in the United States in our coaching model, because we are in the trenches, Yoni, doing deals with students. So we have a revenue share model where we actually teach exactly what we do to them in their marketplace. And that's a really, really cool success model. So that's kind of where we are today. I can go back to any of that, but that's 33 years in about 3 or 4 minutes.
Yeah, love that. So tell us a little bit, I guess, about, we can go back in reverse order. Tell us a little bit about the revenue share model, the system that you built that you invest with those that you also coach.
Yeah. So the model is simple. We have group coaching, we have one-on-one coaching, but they all lead to what? Doing deals. There's a lot of companies that unfortunately know how to market really well in the real estate realm, right? So you get sold into this get rich quick tomorrow thing. And then you have a course, then you go, okay, great. Now what do I do? The real world happens, and then I don't know what to do. Yeah. So we actually bring people through our resource center. So you can call that our course, but it's not. It's an ever changing, living, breathing thing that it becomes a resource center and a teaching tool. And then while you're doing that, because we teach you how to go find the sellers, how to go talk to the sellers, et cetera. While you're doing that, you need help. It's just reality. Like, you can study the script all you want, you can study the deal structure all you want, and then you get into your deal, you need help. So we offer all kinds of support around that, and then we revenue share with them for a period of time. So we're literally in the deal with them, locking arms. So we have the same goal as them. Let's get this deal to the finish line. Versus, here you go, Yoni, good luck. Here's our course. I hope you can do it on your own. And that doesn't really help people. I call it bridging the gap, because people go to a course or a seminar, and then the gap is from there to their first deal. And I can't tell you how many people I've spoken with in the last 12 years since doing the coaching, where they go, yeah, I took this course, so I spent tens of thousands of dollars, but I didn't do a deal yet. And that's awful. So we're trying to bridge that gap and get that tighter and tighter.
Yeah. And will you do deals with, I guess, those who are part of the course and part of the program all over the United States? Where do you primarily focus? Is it also just in New England?
No, the United States and Canada. There's a few people in Canada opening up some really cool pathways there. We do deals all over the United States, east to west coast. I mean, there are pockets that are more populated just by the way people came into us organically, but we do it all over the country. It doesn't matter where you are. It doesn't matter your price range, frankly. What matters is that you're coachable and that you give yourself some time, because one of the biggest challenges I see is mismanaged expectations. People come in because of that marketing out there, social media, and they go, yeah, I got to do a deal tomorrow, or I got to try this for 30 days. No, you got to put the blinders on and don't try, because you'll never do it. Commit for 3 years and you'll have a great experience. It doesn't take 3 years to do your first deal, but if you commit to 3 years, when the roadblocks come, you'll let us coach you through that. I think that's super important.
What's the average time, I guess, for someone who's coming into it new and, eyes wide open and is eager, coachable, and motivated to get their first deal? Are we talking 2, 3, 6, 8, 10 months?
I'll give you the average, because one of the things we obsess over is that exact metric you're asking about, which is we call it time to first deal, TTFD. We have some people that have broke records at 30 days, 32 days, 40 days. We have people that have taken 15 months, because everybody's life's different. Everybody's goal's different. They might be okay with doing 2 deals a year. Our average, if you take every one of those, we don't try to skew the numbers, is about 157 days.
Wow.
But again, like, I have an attorney, I'm giving an extreme example. I have an attorney in our program who runs a law office in Arizona. His goal is not to go out and do 20 deals and break records. His goal is to supplement a deal or two. So if someone like that's going to take a year, they don't care how fast they go, right? Others come in and go, look, I need money now. I got to leave my job. And so they get more aggressive. When you look at the averages of our deals, just to give you a sense and some context, the average street payday deal ranges in our community from 45 grand all the way up to 350 grand just for one deal. So these aren't small deals. So once people learn that skill set, it's a pretty big effect on their finances and their lifestyle, for sure.
Yeah, definitely. I think it took me about 8 months to get my first deal. I was working full time at the time that I was also getting my real estate license. And it can take a little bit of time, but don't get discouraged if you're out there and trying to find your first deal, right? That's really, you just got to work the system and commit and dedicate yourself to it.
Yeah, you know what's great? I got another extreme example, if I can just add this. There was a gentleman, he actually lost his wife like the week he joined us. It was a sad story. And then because that's kind of distracting, it took him a full 12 months to get a deal, but then he got 3 deals, only 3, like within 6 weeks. They all were 100 plus K deals, all owner financing, all $100,000 plus three paydays. That's a game changer. So many people would have quit at month 7, as you know, or month 9 and not hit that. That's so important to know.
Yeah, you're right. You never know how close you are, so don't quit. Tell us a little bit about the 3 payday system. I'm really curious about that. And then I'd also like to delve into, the creative ways that you help and mentor people find those opportunities. I might also have to just read the full book and learn for myself, sign up for the course and join you in your efforts. But, I'm someone who's, I wouldn't say in my infancy, but I've been in real estate coming up probably on a full decade in the US. And I'm really interested in growing my portfolio and scaling, right?
Yeah.
What's the 3-day or the 3 pay? What do you call it again?
3 paydays. Yeah, you said it right.
3 payday. Yeah.
Yeah. Okay. So remember where this was born. This was born because I was frustrated with being on a treadmill, and then every January going, I got to reset the clock and do all that again. Like very transactional, right? Very lucrative, but very transactional. So the 3 paydays was born from that. And what it is when we exit a property, let's say you're our buyer. You're a buyer who has some cash, but you're not financeable yet. Okay. And you're not financeable because of a number of things. You could have just changed your job. You could have started a new business. That's big now, post-COVID. You could have had a divorce or a life challenge and your credit went down. Like whatever the reason is, you need time. So you come forward, you secure one of our properties with a down payment. It's non-refundable. That's our payday 1. Payday 2 is we're paying something on that property. Either if it's owner financing, we're paying monthly to the owner, the past owner. If it's a lease purchase, we're paying the bank. But either way, we have some outgo. You're going to pay us a monthly lease payment while you're getting your finances in order. And there's going to be a delta there, a spread. And we're going to keep that. That's payday 2. And then payday 3 is throughout the term of these deals, there is principal pay down, obviously, that we're not paying. You're in the house, you're paying that. And then it's markup in the price. So for our family company, I'll give you some real metrics. It's not as high as some of the students because our price range is a little lower. Our average payday 1's around 26, 27 grand. Our average payday 2 is $308 per month per property, net. And our average payday 3 is somewhere around $35,000. Now I say that on February 23rd of this year, we closed the payday 3 at $317,000. So wow. That's an anomaly. So I give you the averages that are lower.
Yeah, beautiful. So basically, it's you're finding someone who needs a house, but they're not buying the house from you necessarily. They're renting it from you.
Rent to own. Yeah, they're eventually going to cash it out. It's not an option. It's a definitive cash out date or the default.
Yeah. Can you talk to us a little bit about, I guess, the difference between the rent to own and the contract for deed, avenues?
Yeah. So contract for deed is nothing more than like a vehicle for owner financing. It's just a little more protective for the seller, right? Because the deed sits in escrow technically. Whereas rent to own, no deed transfers. They literally are in a lease arrangement with a definitive date on or before which they're going to go get conventional financing and buy it. Now, great question, because I like the land contract idea. If I have a house and I don't have a term that's short term, like 3, 4, or 5 years, clock ticking. If I have a 7 or 10 year, or I have the house and I own it sub 2, so I own it for 20 or 30 years, I like then financing the buyer. However, with a land contract. However, I like financing the buyer after we put them through some sort of give them a carrot to get successfully through some hoops. Meaning, you're on a rent to own now, Mr. Buyer, and if you make all your payments for a year, and if you eventually get your deposit up to 20%, then I will owner finance you or land contract financing.
Interesting. What do you see the benefits, I guess, of each of those? You said the contract for deed is a little bit more protective for the seller, right? Because it's held with an escrow company typically, and only at the time that you have completed payments, you'll receive that deed.
Exactly.
On the other hand, are there any benefits to either the buyer or the seller?
Well, the buyer, I'm sure, would rather have the land contract, right? Because they have it's more like ownership. They're in the house. And I'm good with that. I'm good with setting them up to win if I have, just my personal preference, a little history of payments and a 20% skin of the game. So I don't have a default. If I don't have that, I might also keep them on a rent to own. And because I can just evict them if there's a default versus trying to go through a whole process.
And do you have to own that house entirely outright to do these kinds of deals, or is this something that you're just working closely with relationships that you have with the bank, and they're letting you do this? Because I know that sometimes lenders don't necessarily love that, and they may call back a no.
Okay, so two things there that you said, they're super important. One is if I'm doing a rent to own with a buyer, there is no due on sale clause with the rent to own. If I sell it on a financing or land contract or a wrap or anything like that, and the deed transfers, yeah, technically there's a due on sale, but I can tell you, and this isn't legal advice, right? I'm not an attorney. I just tell you for 33 years what we've done. There's a way to buy the homes as an investor in a particular trust environment, meaning a land trust in the right beneficiary interest, all that. There's a way to do that to protect yourself from any due on sale clause in most cases. And the key is you pay the bill. If you pay the bill, the bank doesn't want the house, right?
Right.
It's so key for everybody to understand that. Again, that's just been my experience. What I would tell you more importantly is find an attorney that's all they do. We have in our community, but find an attorney. If you're not in our community, that's all they do is subject to purchases and land contracts, and you'll find it very simple and clear. If you call an attorney who's never done it, you're going to be frustrated and you're going to be foggy. It's not going to be the same. You need an attorney.
That's great. I guess you mentioned earlier in the conversation a few things related to two things that you should never do when you're putting together a deal. And one of them was you're never taking on the debt yourself. And the second is you don't have credit exposure, right? So talk to us about this. Are these like non-recourse loans? How do you structure those types of avenues?
So we never take out a loan. If I'm going to buy your house owner financing and you become the bank, I make payments to you every single month. Side note, we typically make principal only payments. So that's 0% in this market. And that's really good. So there is no recourse loans. We don't sign personally. It doesn't matter who we're doing this with. If we're doing a subject to purchase, so I buy your house, the loan stays in your name, I buy the house. We're not on that loan. We're not assuming it. We're paying it on your behalf. There's a big difference. Assuming is I apply, I get approved, I sign personally. And then on a lease purchase, of course, no deed transfers. I'm just paying again the seller's underlying loan on their behalf. So there's never a loan being taken out. There's never a personal signature being done for a personal guarantee ever. So I'll give you a picture. I'll paint a picture on that. Going into COVID, February of 20, we had 72 properties. Our family business, not the rest of the students, had 72 or 3 properties in some form of contract going on with rent-to-own programs. We had a total of 2 or 3 defaults total because these are buyers, not renters. Unlike a lot of landlords had headaches during that. Number one. Number two, we weren't on any one of those personally. So I didn't go to sleep at night going, oh man, what if something happened? Like, we're not on them. So you have a different environment than me pre-08 where I was on everything personally. And that was a nightmare.
Yeah. That's a really interesting lesson, I guess, that you took from 2008 and the mortgage-backed security crisis. Can you tell us a little bit about rent to own, and then maybe we'll talk a little bit about the book and the program, not rent to own, but subject to, which is one thing that I'm personally very interested in and particularly interested in.
Yeah, so subject to just means if you've ever bought a house, for the listener, and you got to the closing table and there was a settlement statement on one of the lines was the bank who was providing you the loan. So the new money. You buy the house the same way, but the loan stays in the seller's name, even though you're buying the house. And on that line, instead of saying, Bank of America and it's the new loan, it says subject to the existing loan with, and then the balance that's due that day you close. So let me give you an example. We just did a house. We're in the process of closing it in Florida. It was referred to us. The kids are young kids. They're not in trouble. They're not behind. They just need to move to Texas. They need closure. If they sell on the open market with a realtor, they know the numbers. The comps are the comps. If they sell in the open market, if they sell quickly before they have to leave, they'll maybe net somewhere around 12 or 18 grand. The way I purchased the property, I said, I'll buy it subject to the existing loan of 319. It's worth about 380. I'll buy it with the loan in place, and I'll give you $31,000 on or before 4 years, no payments, no interest. So they're going to lock in 31 instead of getting 12 or 18 today in 4 years. The loan will stay in their name. and I will make payments on their behalf as I put my rent-to-own buyer in that house that I now own.
Wow, that's a great deal.
Well, here's the punchline. The interest rate's 2.6%. 2.6.
Yeah.
So this is why in this market, people say, I don't know if it's the right time to buy. No, it's the best time to buy. Be super clear on that for the listener. You can get homes at 0 to 4 or 5% right now. 0 to 4 or 5%. You can't do that on the open market. This is the best time to be in creative real estate.
Right. Beautiful. Tell us, how do you find these creative opportunities like subject to property?
Yeah. So that one was a referral, but it's not like we get inundated with referrals. Mostly it's, we have virtual assistants who will call on expired listings that didn't sell with realtors. They'll call on for sale by owners, nothing different than a lot of investors. They'll call on for rent by owners. That usually generates you only enough leads in their kind of backyard to get property conversations going. The virtual assistants will call. If the seller is open to learning more, then we call. So we're talking to the cream, right? If someone says, well, Chris, I'm only getting so many leads in my marketplace based on those 3 sources, that there's a program that feeds that to them every day. But if they don't have enough leads in there, we can go to niche lists like free and clear properties. Free and clear properties are tremendous because remember what I said earlier, when we do a free and clear property owner financing, we make principal only payments monthly, no interest in these homes. I'm talking 99% of the time. So free and clear are great. And people say, well, are there a lot of those out there? In the last decade, the amount of free and clear properties in the United States went from 33% to 39%. That increased. That's a big pond of homes you can fish in. And when you find the free and clear properties, it's not like you find 10 a month. But when you do find those, I will tell you that if it's at least a $200,000 purchase, if it's at least a 4-year term, and you structure a monthly payment of at least $900 principal, the way our 3 paydays work, it's 6 figures every time. So how about if you go find 3 of these this year, right? And you get 6-figure deals. It's a game changer.
So at least $200,000, at least $900 in monthly rent, and at least the third one is
monthly. The 900 monthly or higher is the principal payment you're paying to the seller every month when you find that deal, because they're owner financing you. And the third is so 4 years, 900 and 200 grand.
4 years.
4-year term.
Yeah. Wow. And beautiful. So subject to free and clear, those are, 2 that you're really focused on.
Yeah.
Your favorite. When someone comes into your program, they read the book, they come into remind me the name, it's called Smart Real Estate, right?
Yeah. Smart Real Estate Coach, and the community is called the Wicked Smart Community. Yeah.
Yeah. Wicked Smart Community. What can they expect? Can they expect a full, supportive community, that will provide them with the resources and the knowledge and just the tools to go out and hunt for these opportunities and close these opportunities? I know you've basically built everything, right? So it's all in place for those that you're coaching and mentoring. Does that include the contracts themselves, the contacts to an attorney? Tell us, what does that involve?
In the Quantum Leap system, we call it QLS Home Study course. There, and then I'll talk about the support with it. One of the modules, there's like 11 or 12 modules packed full, but mod 11 is all the contracts we use. And over the years, they change, they evolve, they tweak. We pay for the legal and we update them in the course. So those are all in there, as well as all our checklists internally, because we do deals still. And we might find an error or a risk. So we'll change the checklist and we'll post that. All the lead sources, everything you and I talked about is in there. Yes. And then what we do, because of what I said at the beginning of your show, I think that it's awful that there's companies out there that just don't support. So every Thursday, as of today, you and I are talking on a Thursday. Every Thursday at 4:00 for 50 minutes, we call it the Wicked Smart Sit Down. It's free right now. And it has been since, 2017 or so. And you can come on with deals. You can come on just to listen. You can come on with questions about the course. You have that one connect that's definitive with us. Also in the course, we offer advisory calls. So you can go, okay, I'm kind of through mod 4 and I'm a little confused with this, and you can get on with us and we can help you through that. It'd be a family member or one of the coaches or one of the advisors. So yes, the support's there. And then if you decide to say, hey, I want to get more aggressive, I want to do deals with you guys, well, then it's a whole different level where you're on the phone with coaches, nonstop, depending on how fast or slow you're running with deals.
Beautiful. Tell us a little bit about the book, right? Real Estate on Your Terms. It's a free book that you have graciously and generously given to all of our audience listeners here today?
Yeah, so they can go to Amazon, but we tell them not to on your show, right? They can just go to, I'll give you the link and then you can put it in the show notes. It's wickedsmartbooks.com/Keyrenter, the numeric number one. So Keyrenter 1. The book goes through sort of A through Z, starting from my story to lead generation, to how you speak with sellers, to how deals are structured. And then we kind of intersperse the bunch of students in there with their deals. So you could get the sense of, okay, it's not just this family company, it's the students in different areas of the country, different backgrounds, different walks of life, different challenges, so that they can see themselves fitting in there. And then, of course, some resources and whatnot in there.
Beautiful. And if anyone wants to, check out the courses in the modules, Wicked Smart, right? Is the name?
They can just go generically Yoni to smartrealestatecoach.com. They can check out the QLS course there. They can see us at our virtual or our live events. But if they go to the main site, they'll get what they need there. And I'll tell you what I'll do too. You and I had a totally different connection with respect to my trips to Israel and other things I did. I'll do this. I personally, not the team, would be happy to do a strategy call with anyone who wants to from your show. Just go to smartrealestatecoach.com/Chris free call. That's going to go right to my calendar. It's not going to go to someone else. I'm happy to chat with you. My team will probably love me for doing that, but hopefully I can help some people.
We'll put that in the links below, and I'm gonna have to sign up for one of those so that I can learn a little bit more about subject 2 and free and clear, because those definitely sound like very two great opportunities. Tell us, Chris, what's one thing that you would leave our listeners with? Something that you're the best business advice that you've ever received, something inspirational. We already know what the 2 things that you shouldn't do are, right? Don't sign for the debt. And the second is essentially, never have the credit risk exposure.
Yeah. I would tell you this, first of all, general statement, then I'll give you a really clear 3-step thing. But generally speaking, please, please, please do not listen to the media. If I listened to the media in 2013, I would have never went back into real estate and created what we created. So know that society is not full of people that go out and do whatever it takes to accomplish their goals. So when the media is screaming and 98% of the people are running, go into real estate and go into it aggressively, this is the time to double down right now. And do this. 3 things real quick, and you'll have success with it. Number 1, pick a niche in real estate. They're all great. I'm biased to creative, but there's a lot of great niches in real estate, as Yoni knows too. So pick one you can get behind and you can more than ethically get behind. Number 2, pick a group or a mentor or a coach or a local support group that has been where you want to be, right? I've been through many ups and downs in the real estate market, life challenges, et cetera. If that fits your style and you go, yeah, that sounds like that's for me, great. If not, find someone that you can relate to and that is well-rounded and fits with what you want to accomplish. And then 3rd, this is the key, put the blinders on for 36 months. As I said at the beginning of the show, 36 months, blinders on, and it's not easy, but do whatever that group or that mentor, that coach directs you to do, you will have success. It's when you get off of those 3 steps that you won't have success. So that's the best thing I can leave.
Yeah, wonderful advice. Truly, I really appreciate you being here today. Thank you so much. And
appreciate you having me.
I hope for everyone out there listening, download the book, and don't forget that Chris has generously offered to have a strategy call with you. So book that time in his calendar. Thanks so much, Chris. Have a great day.
You too.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.